Hello everyone, thank you for joining us today and welcome to this educational presentation of Does it really pay to have a professional handle your investments? Now this was a question asked to me this past week by one of our students, and I've heard this often asked before, especially with the market, the way we've had these wild gyrations as of late. And I want you to look at this chart right here. As you see, just going back to the beginning of the year, the market was almost making daily highs or new highs, I should say, on a daily basis. But then this happened, as we all know. So it pretty much erased what it took 2 or 3 months to make in just a matter of moments here. So we have to ask ourselves, should we let a professional handle all our hard-earned money that we've saved for investing, or is it better that we do it ourselves, or should we even be in the market altogether? Well, I'll answer that question in its entirety today and give you a better way to know how to invest your hard-earned capital. So welcome once again. This promises to be a great presentation. My name is Steven Primo, and if you are new to my presentations, we are first and foremost an educational company. We know that anytime you are in the markets, you stand to lose money, and it's perfectly normal and admissible. We know that everyone will lose money every once in a while. What you want to do is have a method that you'll be able to control and be able to limit your risk. And this is what we provide. We provide all of our students around the world in over 110 countries and in virtually every state in the United States sound fundamental education so that you can put the power back in your own hands. I've been trading for 40 years now, 41 years actually. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. A specialist was simply someone who made markets in roughly about 50 stocks. So if you wanted to buy or sell a stock such as IBM, you had to go to the trader who specialized or who made a market in that. So I traded through the crash of 1987, making markets in the bull market that followed. So I've seen and done and traded just about everything you can think of. So the market that we're currently experiencing, I've gone through numerous times. So I know what works in terms of consistency and I know what doesn't. So this is what we do with specialist trading. I teamed up with Pro Trader Strategies around almost 9 years ago, and we just teach and mentor our students around the world all the techniques and methods that I've accumulated in my 41 years of trading. So I'm going to share with you some techniques today and show you a process that you'll be able to find out whether you should be having someone, a professional, actually do your investing for you. But before we begin, as always, we are first required by law to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this process, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as you're taking a brief moment to view the disclaimer, once again, I would also like to invite you, if you haven't done so already, to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post different things from financial wisdom to signals that our strategies have generated. In fact, posted a few good ones just this past week. So feel free to follow us on a daily basis on Twitter. Now, as I stated in the opening statements, we are a little bit different from other companies in the fact that we are not promising the best system. We're not promising a trading method that never loses. We don't believe in that. We are just promising to give you sound fundamental education. I mentor you as my student, as our members around the world, hopefully to elevate your trading so that you can really understand the process behind what is going on. So as you see here, my goal is not to force feed you signals. My goal is not to trade for you. Obviously, I don't want to trade for you. You have to be able to do that yourself. So that's what we want to do. We want to teach you how to trade with the specialist edge. When I was first starting to trade, I struggled tremendously, and this is the edge. These edges I teach were the things that have sustained me going on over 4 decades now. So hopefully they'll be able to do the same with you. Okay, now just like a classroom, since this is an educational presentation, if you're new to my webinars, I love to take your questions, but I like to reserve them for the very end of the class. Okay, that way we won't have to stop for each and every slide. So if you happen to join us late, please wait till the end of class to ask questions. The only question I will answer is the most common one, and that is this being recorded? Yes, it is. So if you have to leave early, or if you are having technical difficulties, many times if you log off and then log back on, the problem will be resolved. But if it isn't, don't worry, we will send each and every one of you a link to this recording. Okay, so we have a good crowd here today. If you happen to join us late, please remember to wait till the very end to ask any questions. All right, so let's start off. And one of the things I want to mention is that people, if you came in late, people are always asking, Steve, is it possible for professionals to beat the market? because that's really what you're trying to do. You want to have a benchmark, such as the Dow and most likely the S&P 500 index, and you want to see if you can match it or at least beat it or match it at the very least, because that's the standard benchmark. That's what people measure their performance by. So you always hear a lot about funds or a lot about money managers who are able to do that, but let's look at the stats, because there is a company called Spiva, all right? Now, if you're not familiar with or you've never heard who or what Spiva is simply a scorecard, all right? What they do is, it's published by the S&P and Dow Jones indices, and what they do is they compare the actively managed funds against their appropriate benchmarks, okay? So if you're using the S&P 500, it monitors and scores the funds as opposed to these benchmarks to see how well they're doing, if they're beating them or at least if they're matching, let's say, the S&P 500. And it does this in a number of countries and regions, such as Australia, Canada, Europe, India, Japan, Latin America, South Africa, and obviously the US. So we looked at the latest Spiva results, and here's what they found, and here's what we found by looking at them, okay? Over the last 15 years, from 2002 to 2017, only 1 in 13 large cap managers, only 1 in 19 mid cap managers, and only 1 in 23 small cap managers were able to outperform their benchmark S&P index. I mean, think of that. Out of all these, in 15 years, going back roughly to 2002, okay, of the major money managers, only 1 roughly were able to outperform the benchmark S&P 500 index. Therefore, as it is obviously possible for a small number of active fund managers to beat the market over various time horizons, there is still no guarantee that they will continue to do so in the future. Ultimately, the percentage of active managers who do beat the market is usually pretty small, all right? Basically, fewer than 8% in most cases over the last 15 years. 8% of fund managers are able to beat the market, okay, in the last 15 years. And obviously, they may not sustain that performance in the future. So there's no guarantee that even this small number, this 8%, will even continue to do so in the near future. Now let's look at the results here, okay? These are the Spiva results. This is a scorecard or the report card. These are all the funds. And over in this right-hand corner here, okay, this is basically showing you how the benchmark outperformed these funds, okay? 92% of large cap funds, 94% of the mid cap funds, and 95%. So on balance, the benchmark did much better, and the benchmark being the S&P 500 was much better 92% of the time, 94% of the time, and 95% of the time than these funds. So let's look at the chart here. This is the actual S&P chart index on a monthly time frame, going back 15 years, going back to 2002, 16 years, all right? And if you look at this, I mean, these are monthly bars. We had some really nice runs out here. This was a really nice bull market we had from 2000 to 2007 before the financial crisis hit. That was a good 5 years of upside. And then this happened, right? But since 2009, 2010, we've had 8-9 years of up market. And you think of that, you know, it should be pretty easy to at least match the performance. All you have to do is invest in the S&P 500 or an ETF representing that. But over the past 15 years, only 1 in 13 large cap managers, only 1 in 19 mid cap managers, and only 1 in 23 small cap managers were able to outperform this index. So I kind of think that answers the questions of whether you should have someone managing your money and do your investments for you. Most likely, you're not going to pick someone in that 8% who was able to outperform the market. If you do, it's going to be very expensive. Maybe they're going to ask a lot of money to be able to be in that fund in the first place. So after finding out, looking through the stats, looking through the research, one then asks, how should individuals manage their money? Okay, how do we actually take care of it? I mean, obviously, we've been having really strong uptrending markets this past 15 years, but what if we go into a bear market? Okay, well, here's what my mentors taught me. They said, Steve, the only way to become consistent in the markets is to take charge of your own trading investing. Okay, you have to take charge. You have to be involved. Therefore, you must first educate yourself in order to become a part of the process. See, the reason why most traders do not become a part of the process, the reason why most traders are not consistent and why they don't take charge is because we've always been taught the opposite. We're always taught to follow someone who says that they know everything or says that they can make money for you. We give them their money, or we spend $10,000 on their class, and we basically follow whatever they say we're supposed to be doing. Okay? But see, we're not becoming a part of the process. We're basically taking ourselves out of the game because we're not listening to the market. We're listening to some guy or some convoluted indicator, but we're not listening to what the market is telling us. And wouldn't it be a lot easier if we just educated ourselves in how to listen to the market? When the market told us it wanted to go up, then we would buy. When the markets told us it wanted to go sideways or non-trending, then we would be out of the market. And then when it told us it wanted to go lower, well, we'd either stay out or go short. Isn't that a lot easier? But see, we've never been taught how to do that. Well, this is where specialist trading and pro trader strategies come in, because that is our function. That is what we provide. We provide sound fundamental education. You see, we're not here telling you that we have the perfect system. We're not here telling you that we have a method that never loses money. We don't believe in that. We're just educating you with sound fundamental tools, methods, strategies that have stood the test of time. And the good news is we've created a platform, our new PTS Primo charts, that does this for you. So roughly 41 years of knowledge and education that's taken me that time to accumulate is put here in one platform that you can process in a matter of days. So let's begin. Let me show you how to take care of this process and how to really manage your own money and how to be in charge of the process. And hopefully you can become a consistent trader investor. All right, let's take it step by step just to show you how easy it is on our platform. All right, step one. Obviously, you want to choose the market you're interested in. This could be an ETF, could be a currency pair, it could be futures. It makes no difference. But just choose whatever you're interested in. It could be Bitcoin. It makes no difference. Let's look at that chart again in the Dow. This is the Dow going back to November. Now, someone looking at this will say, well, Steve, yeah, it's easy to make money here when it's going straight up. But look what happened. It changed on a dime. It's rolled over. I mean, how do I know if it's going to go lower or if it stopped and going to go higher? Well, we don't know. There's no guarantee that will tell us. But one way in which we can put the odds or tilt them in our favor is to listen to the market. What is the market telling us that it wants to do? Well, the first thing we want to do is click on our buy-sell line in the upper green strategy tab. The buy-sell line tells us whether we should be buying or whether we should be selling. Or if we are already in the investment, if we're already in the market, it tells us whether we should stay long or whether we should get out, and possibly if we want to go short. So on our platform, you simply would, once again, click on the buy-sell line, the upper green strategy tab corner, and immediately a menu will appear, drop-down menu. Now, the buy-sell line is simply the 50-period moving average. You've heard me talk about this numerous times. You have access to it right now, but we make it much simpler for you in the form of different categories and features. Let's look at the fluid feature right here. You would click that on, and automatically the back of the screen will turn different colors, blue to orange, red. So what exactly does this mean? Well, when the price bars have the blue background, that tells you you're in the buy zone. So that means it's okay to be long, or if you're thinking about going long, this is where you want to be looking for buying opportunities. Now, if conversely, you see price starts to go into the sell zone, well, this is where you either want to get out of your long position, or this is where you don't want to be buying. You say, I'm going to stay on the sidelines until we go back up in the blue, consecutive bars in the blue. Or if you're an aggressive trader, you'll look to go short. All right. Now, is this a strategy? No, it's just a great, powerful, but simple tool to tell you what side of the market to be on, whether you should be in, whether you should be out, whether you should be looking at it from a buyer's point of view or from a seller's point of view. That's it. That's how simple this is. Okay. But let's say you say, well, Steve, all right, I don't have a broker, I don't have a money manager, and I want to do it myself, but I don't have a strategy. Or the strategies I did purchase, I purchased this $20,000 course, and it didn't work at all, okay? I lost a ton of money. So I have no plan. I have no trading plan, okay? This brings us to strategy 4. This is our most consistent strategy. I learned this some 41 years ago, and I have been using it on a daily basis in some capacity in my own personal trading. I was using it this morning to trade the E-mini futures on an intraday basis. Now, I've talked about this before, but just some brief highlights. It's for all traders, from beginners to advanced. It basically was designed for traders to catch quick momentum moves, because when I traded on the floor, we were in and out in a matter of moments. But we've designed ways for you to stay in the trade days, weeks, months, even years if you'd like, all right? It's got a very moderate intensity level, number 2, okay? It uses only one indicator. That's how simple it is, because it's based on a pattern recognition strategy. The beauty of strategy 4 is that you can apply it to virtually any time frame, any direction, and any market. Now, I'm going to have a bias of looking mainly at stocks in this presentation, but don't worry. If you trade futures, if you trade currency pairs, if you trade commodities, or if you trade the Bitcoin, it makes no difference. Strategy 4 can be applied with consistency on all of these markets. Now, members of the Strategy 4 course receive automatic buy and sell indications, but they're strictly there for educational purposes only, because we teach you what to look for. In other words, we're not going to just provide you with up and down green arrows. We are an educational company, so we want you to understand why a signal has been generated. We simply provide up and down arrows to educate you, to check your work. So if you see that a signal has been generated, you click on the signal arrows just to see if it's been confirmed. Now, our edge is consistency. Not every trade is a winner. Whenever you're in the market, you will have losses from time to time. We're trying to be a 2-step forward, 1-step back company, meaning that if you have a loss, you want to have a method that is consistent, being able to recoup that loss sooner than later, okay? All right, so step 3 is, if we need some structure, we click on Strategy 4 in the upper green Strategy tab. Once again, this is how simple it is. You click on Strategy 4, the drop-down menu appears. We click on Signal Arrows to see where the buy and sell signals are. And we see here that we had a great buy right here. So this was telling us at this point in November that Strategy 4 generated a buy, saying the markets were going higher. All right. Now, we teach you different exit levels in the course, but you could have held on as much as you want. You could have gotten out quickly, or you could have held on whatever you wanted to. We realize this is a index here. This is the Dow Jones Industrials, but you could have traded any stock within that index. You could have traded any stock you're interested in. And look at how it just captured that right at the low. Now, as the market started to fall out of bed and come into the sell zone, look what happened. It generated sell signals. In fact, the best signals were generated the second week of March here. And look at how they caught the top there before we started to really fall out of bed. This is the beauty of strategy number 4. Now, as you can see, though, some signals, remember, there will be losses from time to time. If you're trading the markets, you will have losses, just as if you're an athlete, doesn't mean you're going to hit home run every time. You will strike out every once in a while. So how can we kind of fine-tune or filter out some of those bad signals that aren't as good as the other ones? Well, what we want to do is apply our confirmation tool, the PET-D. All right, you've heard me speak about this before as well. Now, the PET-D is a tool I've been using as well for 40 years. It basically is the best thing I know which defines the trend. For example here, in hindsight, it's easy to see that we had an uptrend and then we followed by a strict downtrend. But how could we have known that in advance? Well, we apply the PET-D, which is our color bar tool. An uptrend is signified by green bars, a downtrend by red bars. You see how this really hugs the trend, and better than anything I've used in my 41 years is an early trend detector, okay? So how does this apply with strategy number 4? Well, we use the PET-D to confirm the signals. So in other words, if we get a buy signal in anything you're trading, that signal where the bar is, the green, or I should say the green arrow, that bar should be colored green or outlined green by the PET-D. That means the trend and the signal are in sync. You will have a higher level of consistency if they are in sync together. Now, conversely, if you have a sell signal, you want to see that bar colored red. That means you will have a higher level of consistency in that setup, where usually it will go lower. So let's see how we could have applied the PET-D with these signals. We see here that this was a buy, it worked very well. This was a sell, worked okay. And then we had 2 more sells. Well, we click on the PET-D tab here, and it automatically changes the colors. Now you see here was a green arrow, and the bar was colored green. So that was the PET-D confirming that it's okay to take that trade. It wouldn't matter if the bars before it, or as you see here, the bar after it was colored red, makes no difference. As long as the setup is green, we can take that trade. Now, here is the sell orders, okay? The first sell was colored red, so that was an okay trade to take. The second sell was colored lime green. So that's the pet D saying, well, even though the pattern is saying to sell, it's not really being confirmed by the trend yet. So I wouldn't take that. Now, guess what? The very next day, another sell order was generated, and that one was colored red. So that's the one you could have taken. Maybe you got in a little later, but that's still okay. Look what happened right after that, okay? So you see how simple this 5-step process is. And this will take, I've spent maybe about 5 or 10 minutes on this. This will take you literally seconds every night just to go through this process. All right, so let's look at some weekly examples because after all, the title of this particular presentation is talking about investing and letting a professional handle your investments for you. So if we're investing, most likely we're not just looking at intraday or daily bars, we're looking at weekly or monthly bars. So let's keep it right in the middle with weekly bars, okay? All right, so the first example here, MU, okay? Now obviously in hindsight, we've been going up higher, all right? But let's say it was back here at this time in January of last year. How would we have known that we should have been buying this or that it was in the buy zone? Well, we click on the buy sell line up here, and automatically we see that we've been in the buy zone and continue to be in the buy zone this entire time. So do we want to sell this in terms of going short? Obviously, you can always sell to take a profit, but do we want to exit this to bet that it's going down? No. Why? Because the background is blue, all right? And if we wanted to go long, we would have clicked on strategy 4 and look at the buy signals that were generated, okay? We could have been going long this stock well in advance of the big rise it had. This price back here was roughly about $25 to $30 that we could have purchased it anywhere before it doubled its value coming into this year, all right? But how would we have known if these signals would have been okay? Obviously, in hindsight, we know that they were fine. But how could we have taken advantage of confirming them? Well, we click on the pet D and automatically the colors change. And remember, a buy signal needs to be colored green. Well, look at all the buy signals. They were all colored green by the pet D, giving you the confirmation and the just the confidence to go ahead and take the trade. Let's look at Facebook, all right? Facebook's been in the news lately. Could we have taken advantage of this? Well, a weekly chart, we add the buy-sell line, and we see that we've been above the buy-sell line going back months, except for this past week. Look what we did this past week, okay? Now, how could we have taken advantage of this? Well, we click on strategy 4 and look at the buy signals that were generated. So even though we, I'm sure if we went back further in time, there would have been more buy signals generated. But just looking back this past year or two, we could have gone long this roughly around 160, 170 and made a quick 20 points. But at this point, since we closed below, we can either be out of Facebook altogether as an investor or we could go short. But how can we feel a little bit more confident about that? Well, we click on the pet D and it automatically colors the bars. Now, as you can see, each and every one of these buy signals was colored green, giving you the okay to go long. But right here, we have a sell signal and the bar is colored red. So this is a confirmation coming from the pet D in addition with a strategy 4 sell signal telling you as an investor, as someone at a longer term, you should be selling Facebook. Is this guaranteed to be a great short? No, but this is a high probability setup coming from these patterns and coming from the pet D tool. Let's look at Netflix, okay? Someone obviously in hindsight would say, boy, Steve, yeah, easy. I mean, the stock is now trading in 300s, but how would I have known to buy it earlier? How did I know that it was going to be in an uptrend? Well, click on the buy sell line. We knew well in advance in December 2016 when the stock was trading around 120 that you should not be selling this. See how simple it is when you're in sync with the market and you don't have to, listen to some guy on TV. You don't have to look at the earnings. We never do those things. If you want to, you can, but why overcomplicate your trading? All we do is apply the buy sell line to know whether we should be buying or selling. And so going back to December of 2016, Netflix was telling us, I'm going higher. If you want to jump on board, I welcome you to join me, okay? So if someone didn't have any structure, didn't have a strategy, you would have clicked on strategy 4 and look at all the buy signals that were generated, okay? Some better than others. Now, even well before Netflix had its meteoric rise here, how would we have known which signal to take? Well, we add the pet D to give us more confidence. This was confirmed, it's green outline. This was confirmed. This one wasn't. It was colored red. But the very next week, it was confirmed. And then you had more confirmed prior to going up to $330, $340. How about AGN? All right, these are weekly charts. Obviously, someone wouldn't have want to be in this stock. It's fallen basically from 250 all the way down to 150, about 100 points since August of last year. In less than a year, the stock has lost, roughly about almost half its value. Well, how would we have known in advance to get out of this? We apply the PET D, and we see that from June 2017 to roughly September, we were above the buy-sell line, but then we started to have consecutive closes below. Okay, and look, we had one buy signal and two sells at the very beginning of the trend change. So how would we have known which one to take? Well, we add the PET D. Remember, buy signal needs to color the bar green. Our sell signal needs to color the bars red. So we click on the PET D, and the buy signal is outlined red. So we never would have gone long AGN. We would have bypassed that altogether. And if we were so inclined, we could have purchased puts or some type of negative option strategy to go short, roughly around 220, as the stock went all the way down to 140. And then there were other chances to go short that were confirmed by the PET D along the way. You see, trading is simple when you're listening to one thing, the market, because that's what the PET D is designed to do. It's designed to listen and translate what the market wants to do. So is strategy number 4. It's a pattern that occurs over and over again that we teach you what to look for that usually has a high level of consistency, whether if the pattern is telling you it wants to go higher or the pattern is telling you it wants to go lower. All right, Microsoft. Once again, in hindsight, someone said, well, yeah, Steve, sure. Anyone knows you should have bought Microsoft. Or you're right, looking back now. But what about going all the way back to October of 2016, maybe August of 2016, all right? Nearly 2 years ago. Would you have known that Microsoft was in an overall uptrend? Well, if you clicked on the buy-sell line, sure. In fact, going all the way back to August of 2016, we were above the fluid buy-sell line. So there's no question you have to ask. You know that Microsoft is telling you, not some guy in a chat room and not some economist, but Microsoft is telling you it wants to go higher. Now you just have to add some structure. If you don't have a strategy, if you don't have a method, click on strategy 4, our most consistent method, and look at the buy signals. September 2016, a buy signal. June 2017, 2 more buy signals. And then as early as recent as December and January 2018, more buy signals, all right? But how would we have known to take them at the time? What could have given us more confidence? Well, we add the PET D, and we see that each and every one of these signals was colored green by the PET D, okay? Now, even though we've had a sharp downward move, we are still above the buy-sell line. So you could have exited your position, but it does not mean to sell and go short. It means to look at this still from a buyer's bias, because if price goes and turns around, you want to jump back in. How about CBS? So we were going lower, we kind of had a nice bounce, and then we went lower again. Well, if you applied the buy-sell line, you see that we knew well in advance that the buy-sell line was telling us, don't get involved with the bounces. We're still below the buy-sell line. We're still in the reddish-orange background color. So we're in the sell zone. You don't want to be buying anything. So let's say you wanted to short this roughly $60, $70 stock. Well, look, there were 3 sell signals generated by strategy 4. Now this one didn't work out too well because the minute you sold, it went higher. Most likely you're stopped out. This one went down for a couple of days and then went back up again. Most likely you would have been stopped out again. And then this one worked out the best. So this is what we mean by consistency, okay? Sometimes you will have some losses from time to time. That's okay, it's natural. You want to have a method that's robust enough to make it back. But could we have fine-tuned these signals? Could we have, filtered out and not taken these first 2? Well, sometimes, not guaranteed, but sometimes the PET D can do that for us. Had we clicked on the PET D, we see here that this sell signal was not colored red. And this sell signal was not colored red. So we would not have taken them. But the third sell signal was colored red. So we would have bypassed these 2, not lost any money, and only taken the trade that had some very nice gains. How about Pepsi? All right, this seems, someone looking at this will say, Steve, how in the world would you know what to do? We went down, straight up, and then back down again. Well, let's see what the market told us what it wanted to do. We click on the buy-sell line, and for all intents and purposes, we were mainly above the buy-sell line this entire time up until February of 2018. In fact, we had two buy signals. Now, the first buy signal, once again, didn't do very well. Most likely, if you purchased the next couple of weeks, you would have been stopped out. But the second buy signal worked rather well. Would there have been a way to filter out that first buy signal? Sure. Let's click on Pet D. And remember, a buy signal needs to be colored green. What color is it? It's red. So we would not have taken that setup. But look at the next one. The next one is green. So we would have taken that, and we basically went from 110 all the way up to 120, a nice 10 points. Now we have two more sell signals generated, and they've both been colored red this past couple of weeks. So they are in a sell mode in Pepsi right now. How about GE? Once again, in hindsight, someone could say, Steve, it doesn't take rocket science to know that you shouldn't be long this. But I would have wanted to know, well in advance up here not to be long GE, because, you could have seen the earnings that were going to be great. There could have been some guy on TV telling me to buy this stock. Maybe it was hitting major support and the institutions were buying it. So how would I know in advance? I don't need to know down here that I shouldn't be buying it. I need to know somewhere up here that I shouldn't be buying this. Okay, what is the market telling us? We click on buy sell line. And guess what? We knew well in advance that the market was telling us not to buy this, that it wanted to go lower. So, if you want to swim upstream, if you want to swim against the current, then sure, you could buy this, but why not swim with the current at your back? So if you were so inclined, you could have purchased puts, or you could have had some type of, negative strategy or spread strategy, something, or been out of the market entirely, sold your position, because look what GE has done. It's gone from basically a $30 stock down to a $12, even a $10 stock. Now, if you were so inclined, if you want to take advantage, you add some structure to go short in the form of strategy number 4. And look at the sell signals generated, way up at the top, okay? And even more coming into this past month. If we wanted to find them to see if they're more consistent than other signals, we click on the Pet D, and every sell signal was colored red, giving you the confidence to take the trade. Now, we've had a bias looking at stocks. I know some of you are saying, okay, this is great, Steve, but I guess none of this applies to me. I'm an intraday trader of the E-mini, or I like to trade currency pairs, so I guess I can't use this, right? No. Strategy 4 and the Pet D can be applied to any market, any time frame, any direction. In fact, let's look at this example here on the E-mini. This is a 1-hour chart of the E-mini going back to March 9th, 11th through the 12th. All right. Obviously, in hindsight, it's been going up. How would we have known, though? Would you have liked to know well in advance back here on March 7th, March 8th to go long? Well, you click on the buy-sell line, and guess what? Right here, March 7th, coming into March 8th, yes, we were above. So this was giving you enough energy to tell you, you know what, I should be a buyer. Someone would say, well, Steve, all the bad news coming out economically, fundamentally, the stuff going on in the world, why would you want to buy? Well, I don't listen to those things. I only listen to what the market wants to do. The market doesn't listen to news, in my opinion. I've never looked at news because the market just listens to what it wants to do. If the market wants to go higher, it doesn't care about news. You've all seen when supposedly great news comes out and a stock or the market goes the opposite direction. And we've all seen when terrible news comes out and the market does the opposite. So the market really doesn't care about news. We care about news, not the market. So I don't look at news. You can if you want to. I just look at what the market wants to do. So right here, the market was telling me it wanted to go higher. Okay. Now, I wanted to add some structure and to confirm, well, the first thing I do is look at the signals. Now, here was a sell signal. Now, this would have been a loss. It's just below the buy-sell line, but then it quickly went back up. And then it was followed by a number of buy signals, which all worked out rather nicely. Now, this is what we mean by consistency. Remember, you will have losses from time to time. Whenever you're in the market, you will always have losses. But you want a method that's able to recoup those losses. Okay, so as you can see here, you would have been able to recoup those losses rather quickly. But still, can we refine the method even more? Can we filter out some of these losses? Well, that's where the PET D comes into play. If you had clicked on the PET D, you would have seen that this first sell signal was not colored red. In fact, it was colored green. So we're not going to take that. And it was a great idea not to, because we would have lost money. So we didn't lose any money. And then each and every one of these buy signals generated was colored green. So this has given us the confidence to take the setups. Now here's a 4-hour chart of the Canadian dollar. All right, someone looking at this would say, well, Steve, how in the world are you going to trade this? It went straight up and then went straight down. Okay, I don't think your techniques or methods could have helped me. Well, first thing we want to do is apply the buy-sell line. All right, so we would have known well in advance before we had that nice run-up that we were buyers. And then we would have known roughly about halfway down to get out and to turn into a seller. We had some structure and the PET D, and guess what? A great buy signal right here prior to that big run-up. Another buy signal generated, but in order for us to take it, we want it to be colored green, and it's outlined as red, so you would not have taken that. You would not have lost any money. And then here's a sell signal colored red. So you could have taken advantage of that, and roughly about 70, 80 pips to the downside. And then lastly, let's look at a weekly chart of Bitcoin. All right, we all remember that Bitcoin was the darling last year. It went up straight up, almost in a parabolic curve, went straight up, and then it's hit trouble as of late. These are weekly charts. If you wanted to invest in Bitcoin, how could we have taken advantage? Everyone was saying, gosh, this thing is way too high now. I can't buy it, but boy, I would have loved to have bought it back here. Well, let's apply our buy-sell line. Guess what? In December of 2016, we had consecutive closes above the buy-sell line, and we continued to stay. So you knew in advance that you should not be a seller or short Bitcoin. You should be only looking for buy setups. So you say, well, okay, I don't know how to buy this. Do I look at news? Do I look at what's going on in the world? Do I read about Bitcoin? Well, you could if you wanted to, but it's just as simple as clicking on strategy number 4 and look at the buy signals that were generated. A buy back in January of 2017, colored green. Here's a buy in March. It was colored red though, so you wouldn't have taken it. But the very next week, at the end of March, a year ago, a buy signal colored green. So you could have taken advantage of that. 2 more buy signals in September of 2017, and look at the nice run that happened. Okay, now by that time, we have stop placements in place in our courses. We also have exit levels. I'm sure you would have taken advantage of some of this, or at least raised your stop to protect your profit. Now, as we've come down lower, we still have not gone into the sell zone. So we should only be looking at Bitcoin from a buyer's point of view. And in fact, 2 buy signals were generated at the beginning of February and 1 just last week. But in order to take those, we want them to be confirmed by the PET D. And what color are both of those buy signals? What are the colors of the bars? Well, obviously they're both red. So we would not have taken those signals. So we're waiting for a buy signal to be generated in Bitcoin that is colored green by the PET D. This gives us the confidence to actually take the setup. So let's recap before we go to questions and answers. This is a simple process. Step 1, choose your market. Does not have to be stocks, as you just seen. I showed intraday charts of futures. I showed 4-hour charts of currency pairs. I showed Bitcoin. Makes no difference what market you trade. Step 2, click on the buy-sell line. This will automatically tell you if you are in the buy zone or the sell zone. In other words, it will tell you whether you should be looking to buy or whether you should remain long if you're already in it. We have a number of traders who already have positions, but they just use this to see whether they should be staying in the stock or not, okay? So this will tell you if you're in that blue background, it's okay to be long or it's okay to look for longs. If you're in the reddish-orange background, you should be out of the market and you should be looking to go short if you're so inclined, all right? A way to find that is by clicking on, with step 3, the fluid feature, because the fluid feature is so good, it really tracks, rather than having one-dimensional, it tracks the ebb and flow of the buy-sell line, all right? So once you know what side of the market to be on, if you want to go further, you need some structure. You can't just buy at the market because the buy-sell line is not a strategy. It's not a system. Just because price crosses above into the blue zone doesn't mean, well, I guess Steve says I can buy it, right? No, you need some structure. You need some high probability entry points. You can do this in step number 4 by clicking on strategy number 4. That is one of our most consistent strategies. It's a pattern recognition strategy. I learned it some 41 years ago, and I continue to use it on a daily basis in my own personal trading. And then lastly, strategy 4 will generate a lot of signals. Some are better than others. There will be losses from time to time. Is there a way to refine out some of those losses? Yes, by applying the PET D. You confirm the signals with the PET D. If you get a buy signal, and it's all confirmed in place by strategy 4, you want to confirm it with the PET D. So the buy signal should be colored green. The bar that the signal is generated on should be colored green by the PET D. If you get a sell signal, that bar should be colored red. You will have a higher level of consistency if you use the PET D to confirm your setups. So, as we conclude here, ask yourself, do you think these edges could have helped your trading this past year? Do you think we've convinced you that you should be in charge of your own investments, that you shouldn't rely on so-called professionals? Remember, only 8% going back 15 years. We've had some great bull market runs here in 15 years. Only 8% of all the top fund managers were able to beat their benchmark S&P. Don't you think you could do better than that small 8%? You can if you educate yourself. There really is a holy grail to really being a consistent investor or trader. It's educating yourself. Guess what? That's what we provide. We provide sound fundamental education so that for the very first time, you can be in charge of your own trading and investing destiny. So here's our attendee special for today for all the people in attendance. We're going to offer you what we call our dynamic duo special. This is strategy number 4 along with the PET D. Okay, you get instant course access, up to 20 instructional videos. We teach you all the different entry points, different exit points, different stop placement points, and then you can decide which one you want to take. It also provides you with signal alerts, okay? So you get the up and down arrows to know whether you can confirm your setup, whether you saw the actual pattern taking place. This also comes with the PET D course, 4 different trading techniques that you can also use with the PET D. They're totally different from confirming the signals, and with both add-ons as well. In addition, you get mentoring correspondence with yours truly. So anytime you have a question, anytime something doesn't make sense, you can always email me with questions. But we're not stopping there. Remember, we showed you this process as it was applied with the new PTS Primo charting platform. Remember, this is the educational portal we feel that you've been searching for. Why? Because it teaches you how to listen to the market. 41 years of information that I've accumulated is put into this charting platform. Well, we're going to offer you the platform in addition to our dynamic duo of strategy number 4 and the PET D. Now we're going to give you 12 months of the PTS Primo charting platforms. You can trade along with it. Now usually that 12 months would cost over $1,900. Don't worry, we're not going to charge you $1,900 for 12 months. In fact, for 1 year, we're going to give it to you free. So this is included with the Dynamic Duo special. But we're not stopping there. We're also including the scanner. An extra bonus, we're going to include a scanner so you can, on a nightly basis, scan in a matter of moments hundreds of stocks and all the different indices, the S&P, Dow Jones, different ETFs, currency pairs, futures, and you can find out what are the best setups for the next day that are being confirmed by the PET D. For example, this is how simple it is. You'll simply click on the scan once you go to the scan page and you've downloaded whatever indice or group you're looking at, and in a matter of seconds, you'll see all the buy signals and sell signals for the next day. That's how simple it is, okay? Now remember, we are not a signal service. We are educating you so that you will know exactly why a signal was generated. And ultimately, you'll be able to spot these on your own. But if you're the type of trader that likes to look through hundreds of stocks on a nightly basis, well, then you're going to need the scanner, okay? If you have a basket of stocks, maybe 10, 20 stocks you like to look at, well, you can do that on your own. And after some time, you'll be able to spot automatically through my teaching where a strategy 4 signal has been generated, okay? So we're giving you strategy 4 plus the PET D plus 12 months of the PTS Primo charting platform. A great, great offer. Now let me break this down for you. If you purchase these separately, strategy number 4 would cost you roughly about $700. The PET D would cost close to $3,000. And as we stated earlier, 12 months of the PTS Primo charting platform would be over $1,900. So individually, if you bought these separately, you're going to spend over $5,600, okay? Don't worry, you're not going to even get close to spending that much today. We're going to slash that tremendously and only charge you $29.95 included with the 1-year PTS Primo charting platform, but we also have payment plans included. So if you can't come up with that lump sum, don't worry. You can put a small deposit down and pay it off, and you can still get Strategy 4, the Pet D, and 12 months of the PTS Primo charting platform. This is a great, great offer to kick your trading and investing into overdrive and to really start for the very first time to be in charge and become a part of the process of your own investing. So here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. You can email them or call them directly at area code 310-598-6677. Now that link will automatically take you to the sign up page, and it's not a live link. You have to copy and paste that onto your browser. But if you look in the chat box on the far right hand corner of the GoToWebinar column, there is a live link that has been posted. You can click that on and it will automatically take you to that sign up page. Now my suggestion would be to call Pro Trader Strategies. Why? Because we realize that not everyone can come up with that lump sum. So work together with them. You know, there's no obligation. Ask them questions about putting together a payment plan. They can structure one for you that meets your personal needs, and you can be up and running as early as today. You can be emailing me questions this evening about what you've studied in the video course and by using the Pet D as well as the platform. This is a great, great offer. You don't have to come up with that lump sum. I would suggest contacting Pro Trader Strategies and talking to one of their trading consultants. They have trading consultants manning the phones right now. They can answer any question you have. There's no obligation, and then you can decide for yourself whether you want to take advantage of this great offer, okay? Remember, this would cost you close to $6,000, but we're discounting it down to $29.95, and still you don't have to pay that in one lump sum. You can put a small deposit and structure a payment plan with Pro Trader Strategies, okay? So call them at 310-598-6677. I'll leave all this information up here, and I want to thank you for holding off on any questions. We have the last 10 or 15 minutes to answer any questions that you may have. DT is asking, is your Pet D settings the same on daily, weekly, monthly time frame? I have to go and would like to talk with someone. I would contact, first of all, to answer your question, if you have to talk to someone, contact Pro Trader Strategies. But yes, the settings you use, we have 2 Pet D settings. If you're looking for longer time frames or to stay in trades longer, we suggest using the Pet D Slow. If you're looking for quick entries to get in and out quickly, we suggest using the standard Pet D Fast, okay? So it's up to you. And remember, once again, we just furnish you with these different options. But I would say that the majority of the time, most traders rely on just simply using the standard Pet D or sometimes the Pet D Fast, okay? But one thing I do want to state, I know a lot of people think that because it is a color bar tool, I see some questions here where they say, does it repaint? In other words, sometimes, I'm sure you've had this experience before, you've had color bar tools or indicators that are a certain color. And you'll look at the bar, it's a certain color, and the indicator is a certain color, and you say, oh, okay, well, wow, it's telling me to buy. And then you'll go back later on and say it's 3-4 hours later, and then you'll look back to see where that bar was a certain color, and guess what? It's changed colors. It's the opposite color now. And you say, how did that happen? Well, what it does is it repaints itself because it takes not only information for the past, but information going forward. And so it will adjust. The Pet D does not do that. So I just want to clear that up. The Pet D does not repaint. Once the bar closes, it stays that color. So it's not something that's editing, that's altering with the movement of the market you're looking at. Many times if you're trading a daily bar, in the beginning of the day, the bar may be red because maybe the market's down. And then let's say the market has a nice rally at the end of the day. Well, the bar will change because now we're going up, and maybe the Pet D switched now to a green color. You won't see this happening like crazy. It won't be going back and forth a lot of the time, but maybe once or twice during the day. Well, whatever the bar closes, that's the color it stays. So don't worry and think that it's going to change a week later. You look back and say, hey, it closed green, but now it's red. It will never do that, okay? I hope that answers your question. Pierre is asking, how can I scan the cryptos like the Bitcoin, for instance, and others? Well, Pierre, we provide you with a list of cryptos and currency pairs. So the tech support at Pro Trader Strategies does that. And so it furnishes you with a list. You scan them the same way. You pull up a scan page. You click on the download what list you want to look at. This could be stocks, can be currency pairs, ETFs. It's up to you. And then you click on Strategy 4 and Pet D, and it'll automatically bring up those setups for the next day. Okay, it's that simple, and this entire process takes minutes to do. It's really simple and frees up a lot of your time. Okay. Brett saying, can the PTS chart display 5-minute for day trading? Yes, it can, Brett. I would contact Pro Trader Strategies because I know they have different streaming and different options for live data and so forth. But yes, you can. In fact, it goes. They have 1-minute charts. So if you want to go even smaller time frame than that, the PTS charts goes from a 60-minute, goes 30-minute, 15, 10, 5, 1 minute. Okay. So there's lots of different ways to use it. And remember, there's no obligation to call Pro Trader Strategies right now and ask them these questions. Remember, I'm in charge of the education for teaching you how to trade. Anything in terms of tech support, wanting to know more about how to upload a chart or how to scan, they can answer those questions simply and easily for you, okay? We have a great tech support department. They mostly resolve any issue you may have in a matter of moments. Manla says, I have improved my trading since I started to listen to your trading ideas. Great. This is what we try to do. We are, as I stated, Manla, we're not here to sell you some magical system that never loses money. And, we would never say that. I lose money. There's nothing wrong with that. That's like a baseball player or a basketball player saying, I've never missed a shot. I always make a basket. Not, Michael Jordan, one of the best basketball players of all time, missed shots. Some of the best baseball players struck out. Entertainers, they'll have a flop movie or a flop album. So nothing is always a winner. That's okay. What you want to do is have the capability to make it back, and sooner the better. And that's what our methods try to instill in all of our students around the world. Consistency, okay? It's okay to lose. As long as you're in the market, you will have losses from time to time. But what you want is a method that's able to recoup those losses. That's what's more important, not that you don't lose, okay? So if anyone ever tells you that they never lose, I would run, because I've been trading for 41 years. The best traders I've ever known have lost, but they've been able to make it back, okay? So I'm glad to hear that you've improved. Great. That's what we're trying to do. As you can see, our mission here is simply to educate you as traders so that you can, be consistent. There's more than enough to go around. I've often stated this. The markets are like a big pie in the sky. There's not a limited amount of profits. And so at the end of every day, well, that's it. That's the only amount of profits we can give out. And so there's no more profits for the end of the day. It's not like you walk into a bakery and they've run out of croissants. It's not like that. The markets are unlimited amount of profit. Doesn't matter. And so there's more than enough for everyone to go around. So why wouldn't it be in our best interest to educate you? You're not going to steal anything away from me. There's more than enough for everyone. As long as you're in sync with the market, it wants to give you profits. So you have to first learn how to be in sync with the market. The buy-sell line does this. And then you have to know how to jump on board once you're in sync. And Strategy 4 does this. And then lastly, to refine your entries and to confirm your entries, you can add the Pet D. It's a great, great process that really simplifies it and teaches you how to listen to the market. The best thing is, for the very first time, you'll have the pride of knowing that you did it yourself. You didn't have to rely on anyone or anybody else. You didn't have to pay all these exorbitant fees for having someone manage your money. You did it yourself. So you owe it to yourself to get back on board in 2018. This is a great offer, a great discount, almost about 40%. Plus, we're offering payment plans. So I can't think of a better way to come on board and for me to teach you how to use the things I've been using for over 4 decades now, okay? In conclusion, remember, give Pro Trader Strategies a call. There's no obligation. They would be happy to answer any question. And most importantly, they would be more than happy to structure a payment plan for you. So in just a matter of moments, you can put a small deposit down and you can be up and running and emailing me tonight, okay? So thank you so much for taking time out of your Wednesday to hear me speak. I hope you got something out of this. And in conclusion, I wish you the best of luck trading, but more importantly, I look forward to you all becoming students of mine at Pro Trader Strategies and at Specialist Trading. Thank you so much. I hope to see you next time. Bye-bye.